What's going on, people? Welcome back to my channel. In this video we're going to take a look into market structure. We're going to take a look also into the market fractality. I think this is something that is very overlooked in the Forex space. Kind of taking advantage of the time frames that we have available to us is key to understanding market structure and where we're actually looking on a daily basis. Okay, so we're going to take a look into this in just a moment. Before we get into the video, I just want to say or let you know that if you come to my website pornofx.com and scroll all the way to the bottom, we do have a monthly free live call. What you can do is you can click on here, join in the Discord link, and head over, and obviously on the date that is specified here. I have one of these obviously every month. If you'd like to join and get a bit of free information, then that's absolutely open to you. Okay, so one of the main things that we can look at when we're looking at market structure is making it very simplified, right? If we can make market structure simplified, then we can be very clear and defined on where our levels are of where is market structure, and if market structure is holding, and if it's not holding, then how can we identify this? Okay, so the first thing you actually have to do is define what kind of trader you are. Are you a swing trader? Are you a day trader? Are you a scalper? Or are you a position trader? Now, I don't really know too many position traders. I know a few swing traders, but the majority of people are day traders or scalpers. For me, I'd like to call myself like an intraday swing trader, if you like. I like to get in the market within the day and then get out within several hours if possible. If price reaches my target, or potentially I take partials, then pops the stop loss straight back to break even, and whether that hits break even or not, that is kind of down to the market, right? So let's just go, the way I'm going to base this is going to be starting from a swing trader perspective, and also a day trader perspective. Okay, so we're going to be picking 2 or 3 time frames, and this is exactly what I was just saying, so specific to what kind of trader you are. For me personally, I will stick to the daily, the 4-hour and the 15-minute time frames for my swing structure, for my market structure. Okay, so looking at the daily chart, let's just start over here. Okay, so what we have, one of the things that is kind of a misconception of market structure is every lower high, higher low, lower low, lower high is new market structure, and this is actually incorrect. Okay, so if we start from here, right, we have a higher low, this is a higher high here. Okay, so higher high, higher low, here we have a new higher high, right? So from this point here, we now have a leg of price. Okay, this is a leg of price. Now we get the pullback here, but we don't actually know, whether price is going to stop here or whether it's going to continue to the downside. Okay, so what can we actually do? How can we identify where price is going to stop? Now, this is something which you really don't have to anticipate. You don't have to get right. You have to wait for the market to show you confirmation. Okay, so let's just delete these, right? What we'll do is from here, we understand that potentially we can get some sort of push to the upside from here, but we're not trying to pick this low. We're not trying to mark off this low and say, okay, this is the low of the market, right? Because we could quite easily come down into maybe this area here, or maybe this previous range right here. Okay, this is absolutely potential. It could happen. Now, how we can actually identify this is using horizontal rays, right? So we can pick off the high of the market, and then we can also pick off the low of the market. Now, this is the low here, which is the beginning of the leg, and this is the high of the leg. Okay, so what we're actually doing is we're waiting for this high to be broken or this low to be broken. Okay, so once this high gets broken here, we understand that the market is bullish. Okay, so what we can do is from this point here, we can understand that we can look for bullish price action. The first thing that you do, we're not looking for breakout traders. We're not trying to be a breakout trader. We're trying to wait for the market to break out, pull back in, and then react from some sort of POI or some sort of area, and then look to continue the market, right? Continuations should be about 80% of your trading. Reversals should be roughly about 20% of your trading, because if you're trying to get reversals, you're going to get stopped out a lot more than if you're trying to just follow the trend and get into continuations, right? So it's sometimes a little bit of a misconception, the fact that this is a pullback and then you're going to enter here and that's a pullback trade. It's not a pullback trade, it's a continuation trade, because you're still following the overall trend of the market, right? The trend is bullish. You're waiting for the pullback to get into the continuation, okay? So with that understanding, what we're looking is we're picking the low off, then we're picking the high. And then what we do is we wait for market to break either the high or the low, okay? And then from this point, we need to identify where is the last place, or where is the beginning of this new leg, okay? So we have the new high, and same again, we're not trying to guess where this is. We're waiting for the market to actually show us where the high is, okay? So this is the low, and then this is the high, okay? Now from this point here, we then get a pullback, okay? So we start pushing to the downside. And this is where the fractality of the market comes into, right? Because if we're just using the daily time frame, you're not going to really get into too many trades, because you're going to be waiting a lot. And this is, you know, the benefit of having lower time frames. Now, the fact you can use this on lower time frames also, I personally use, like I just said, from the daily, the 4 hour and the 15 minute. I mainly focus on the 4 hour structure. And then I get down onto the 15 minute, and if we get a break of a 15 minute structure, then I will look to, you know, potentially get into a trade. So from this point here, we have this high and then this low, okay? And then we start breaking down and we start making lower lows and lower highs. Now, are we actually breaking the daily market structure? This is where people start to go wrong, okay? Because then they see this is like potentially a strong high. It absolutely could be, but the reason it's not is because here we have a high and then a higher low, and then this takes out this high, and then we start putting in lower lows, lower highs, lower lows, lower highs, lower low, and then we react from a POI, and then we start making higher highs, higher lows, higher highs, higher lows. Okay, so this is all intraday structure inside of the daily structure, okay? So specifically marking off the absolute leg, right? The ultimate leg, right? So this is the beginning of the leg, this is the end of the leg, okay? So this is actually the range that we are inside. What you can actually do from this is, if you watch my other video on ranges, you can actually get a bit of information, and you know, this can kind of help you in market structure also. That's the basis of the secret sauce behind the ranges, okay? So let's drop down to a 4 hour and let's look at market structure here, okay? So here, let's start from the left side of the chart, and this is the thing that you need to focus on, looking at the left side of the chart. Because if you start looking at the right side of the chart, you know, what's actually happening over here, you need to be looking here, okay? Because then you're gonna get the understanding of where market structure is actually going, okay? So from here, let's just go from this high, right? So we start this high here, we put this low in, okay? We now need to wait, is this high gonna break or is this low gonna break, okay? So then we get this low being taken out, but we don't really get too much of a push any further, right? We don't push too much further. We have to be careful of what we're actually tapping into. If there's anything to the left side of the chart, let's just look. There's potentially a POI inside of this area here, okay? So we need to be careful of that. But what we're then doing is identifying what is happening here, okay? So let's delete this one here, okay? So we're marking off this low and this high, okay? This is our high, okay? So inside of here, we start then making we make a low, and then we make a high, and then a higher low, and then a higher high. So from this point here, what you can then do is you can identify and you can say, okay, potentially this is going to be liquidity. It's going to be resting liquidity to be filled. So from this point here, you can start looking for longs, because we're starting to break sort of 15-minute structure, okay? This is the 4-hour structure right here, okay? We then sweep this low, and then we instantly return back to the upside. Same again as I've described in the ranges video, okay? Now from here, this low gets swept, and then we start to push to the upside. So same again, we have this range inside of here. we break out of the range, we return in, and we continue. Okay, so this is how we can utilize the range concept. Okay, now EU, let's just get rid of some of these. EU at the moment is currently ranging. Okay, so let's look at this specifically, right? So let's look at the leg. This is the leg that started, okay, the push to the downside, and this is the leg, or the end of the leg, should we say. Okay, so we are currently inside of this range. So what we now need to do is go, okay, we're inside of the 4-hour range. What we can now do is get onto the 15-minute time frame and then start looking at where can we continue price, right? So we actually put in this large range right here. Let's just zoom into that a little bit more. Okay, so we put in this range here, this high down to this low. Now everything inside of this area here, from this low to this high, okay, we can look to trade. Ultimately, you can look to trade a range, or you can look to trade a trending market, right? If we can identify that this is now a large range, what we can then do is use the 15-minute time frame to work out market structure. Okay, so same again, we put in a small range here, okay, this high to this low, and then what do? We wait for either the high or the low to be broken. Now here we get a break of the low, we start pushing to the downside, right, and we have conviction with it. We do push further. We don't just, you know, push down like that and then continue back up. We do push through it and then continue with this momentum. Okay, now when we pull back to the upside, because remember what we're doing is we're not looking to trade instantly from this breakout, we're looking for the pullback. Okay, so here we get the pullback. This is a I believe this is a Friday. Okay, so this is NFP day. So this was this large wick, right? But what you could actually do is, you know, if you don't trade NFP day, like me, I don't really trade NFP day, and after NFP it's like past 12 p.m. for me, so I don't really trade that. Okay, but this next week, Monday, you can start looking for shorts, because what you can do is understand that we've had the pullback, okay, we've tapped into a POI, and then we've started to break to the downside. Okay, so then what we can do is identify a POI, then look to short it. Okay, what can we do? We can target these equal lows. As you can see, we get a very nice break of that low. We can also target this structural low, because what we're doing is on the 15-minute time frame, we are breaking market structure to the downside, but we understand that in the 4-hour structure we have this high and this low, right? But because we are breaking structure on the 15-minute time frame, we can then understand that, okay, maybe the low of the 4-hour structure is going to be broken. Okay, so we can utilize that in understanding that, you know, 15-minute market structure is actually breaking to the downside. So now we can potentially target the 4-hour low. Okay, so as you can see, what we then do is we break this low, but on 4-hour structure, remember we're using 4-hour structure. So what you need to do is get down onto the 4-hour time frame and see, is it a liquidity sweep? As you can see, we push through with a wick and then we close back above this level. Instantly from this point, you know, if this next candle closes back above it, then we can start looking for longs. Okay, same again with here. If we look at this as a range, we have a high and then a low. Okay, we get this little pullback here. Okay, this makes equal highs through here. We can then start looking at a POI in this area here to then take this long. Okay, and then we can start targeting this and potentially up here. Okay, now obviously we don't reach there because what we're doing is we are keeping within the 4-hour structure. We're not trying to break above here because actually the market is overall bearish. Okay, but we can utilize this understanding that the 15-minute chart is, you know, pushing to the upside. The 4-hour has now swept liquidity, so we can expect upside. Okay, same again, we can mark off a POI inside of here. Okay, then what do we start doing? Well, we're now inside this low and this high. Okay, so what do? We make a pullback, but then we make a lower low, lower high, and then we break this low again. Okay, so from here we can start looking for shorts again. Okay, but what you need to do is also be aware of opposing POIs, because when we're in a ranging market, the market can bounce from a level, right? So you need to be trading from POI to POI instead of looking at taking out liquidity. You can start looking at taking bounces from POIs, because what we understand is this high could take out this low, but it also could bounce from here and then take out the high, right? So if you're holding this position and you don't take partials or you don't take any profit at this level, you're then going to get stopped out at break even or stop loss, right? If you don't move your positions and you don't manage your positions, okay? So the general idea of this is to look at daily and the 4-hour market structure, okay? If we look on the daily here, we can see that this is the high and this is the low. Now, every time we sweep this high, let's just cover this up, right? We can see this is the high. We swept it with a wick and then we closed below. So every time we do this, we then reverse back to the downside. So this is when you can then target this low, okay? Same again, we react from here, then we start pushing lower. Now, ultimately, what we've done here is we have not swept this low, because this is a liquidity sweep. I anticipate that this is going to come a little bit higher from here, okay? We shall see. We've got FOMC today, so this could potentially be the push that we're looking to break out of this range. We could get a tap up. Ultimately, what I'm looking for is a tap up into here and then a push further to the downside, okay? So this is pretty much what I'm looking for. We shall see if this happens. As I described in my previous video of potentially a position which you could have taken, we'll have to see whether that kind of happens. But market structure is, you're not looking at each higher low, lower high, lower low, lower high. You're looking at swing structure, okay? So this is the low, this is the high, okay? Which one do we break first? Okay, we break the low, but here, this is the daily structure, okay? So we do, on this day here, we can't say that we've broken below because this is a wick and it's closed above, okay? This day here has broken below, perfect, okay? So now we have a confirmation that we're breaking lower, and then what we can do is start looking for shorts inside of this pullback, okay? So here we actually do make relative equal highs, and then we start to break down, okay? So we're creating liquidity, understanding that there could be some potential upside at some point, but as soon as this is formed, because this is on the daily time frame, we can then understand that, okay, this liquidity is being left for later, and we can start looking short again, okay? Then you can target this low, you can target this low. You can target further lows, extreme lows down here, okay? So 15-minute structure is exactly the same as 4-hour structure, and it's exactly the same as daily structure. You need to look at the beginning of the legs and the end of the legs, okay? Which side or which end is broken, okay? Because as you can see here, we have this low and this high, and then we break this low, but then we break the high again, okay? One, that is because we have a liquidity sweep there. But also, people start looking at that as saying, okay, now we're breaking structure to the upside, okay? Well, actually, you can clearly see that that is not what happens. We are just sweeping liquidity because we are inside of this larger range, okay? So I hope this all helps. You have to, it takes a little while to get your head around this, but try and make it very simple for yourself. Use a specific set of rules, right? Like a tick box kind of thing. You need to use daily, 4-hour, and 15-minute. Once you can identify those, then you can start looking for POIs and you can start looking to trade with the trend, okay? If you enjoyed this video, drop a like, comment, and subscribe. Let me know if there's any videos that you would like me to make. I'm trying to keep everything very simple on this page. My YouTube, I want to be very simplified and to help you guys with anything that you're kind of struggling with, right? So yeah, drop a like, comment, subscribe, and hopefully I'll catch you in the next one.